Thank you for tuning in to the 26th episode of the Misaal podcast. In this episode, I am joined by Shehryar Hydri. He's a managing partner at Deosai Ventures, an early stage VC firm in Pakistan. During our conversation, we discuss his journey from working at a startup to now investing in them, as well as the need for early stage startup funding in Pakistan. As we continue our conversation, you will discover the state of startup funding in Pakistan and how entrepreneurs are navigating the new landscape, the impact of Airlift's shutdown on the broader ecosystem, due diligence performed by venture capitalists before investing in startups, and the current trends in startup deal flow. Let's listen in. Welcome, Shehryar, to the Misaal podcast. How are you?
Thank you, Zahid. I'm doing good. Finally, this is better late than never.
Yes, definitely. It's nice to have you and talk to you. So let me start by asking you something that I, while researching your background, I had completely forgotten. I mean, I had read somewhere, but I'd completely forgotten that you were at a point working at Convo, and then you went to Pasha, and then of course, you're investing right now with Deosai Ventures. If you could just summarize your, journey so far, like going from a startup to I would say like a government organization or maybe semi-government organization that lobbies the government to actually investing in startups. So you've had like quite a journey. So if you could just summarize, where have you been, what have you done, and where you're going?
Right. So I've been a non-techie in the tech sector for about 2 decades now, and as a founder, I've been both on the services side as well as on the product side. And on the services, prior to Convo, I co-founded one of the sort of early game development and CGI studios called Trango Interactive out of Islamabad, and we were doing mostly services for the North American and European market, giving services to game developers, other animation studios, and then later on ad agencies, production studios, the Discovery channels of the world and the top sort of Fortune 500 brands and working on their CGI campaigns. So that was sort of high-end creative services work. And then after that, with Convo, I was heading their Pakistan operations and I was part of the founding team initially. Convo, obviously one of the first few SaaS-based products out of Pakistan, where a friend of mine, typical garage startup story, where Faizan Buzdar, the founder and CEO, he started in a small room from my place, and then sort of grew the company, moved to San Francisco, raised about $15 million along the way, and made it, put it on the map as one of the first SaaS success stories out of Pakistan, because we didn't have a lot of products at that time. Especially Adobe invested in us, and a few sort of high-end VCs along the way. So that was services as well as products. And then post Convo, I was heading Pasha, which a lot of people do think that it's a government or semi-government organization, but it's actually just the largest or the sole trade association or trade body representing the entire IT and IT-enabled services industry. So in Pakistan, for example, textile is the biggest sector, and Aptima represents textile, so that's the equivalent on the tech side with Pasha. I headed Pasha for a little over 2 years, and then post Pasha, right when the pandemic started, we were trying to figure out how to sort of contribute in the local ecosystem. And when I say we, so it's mostly the partners are themselves tech CEOs who run their own companies here in Pakistan or abroad, or are running them right now in a full-time capacity. And, we were looking at the ecosystem developing. And in 2020, before all the hoopla of 21 and the craziness of last year, the ecosystem had come a long way. And a lot of VCs had actually started working in Pakistan over the last 3 to 5 years, focused only on the Pakistani market. So all of those were good signs. But we saw that from the sidelines, we saw that there were a few gaps that were not being filled. And we had been waiting for these gaps to be filled, but we realized, we looked at each other and we realized that, nobody's going to come from outside Pakistan and fill those gaps. It's going to be us, people who are on the ground in Pakistan and who understand, the grassroots work. So those gaps were primarily that a lot of VCs operating in Pakistan were because it was a nascent market, and a lot of these VCs or their partners were actually first time VCs. They had positioned themselves as early stage VCs, but they were not genuinely early stage, and they were trying to find their comfort zone along the stream, whether they were upstream or downstream. And their website said early stage, but they were primarily seed stage and beyond. So nobody was really doing pre-seed funding in Pakistan in a structured way. And because unfortunately there weren't any structured syndicates or angels who were doing it through public platforms, the layer of angel investing in Pakistan is still very, very weak, and it was non-existent over the last 3 to 5 years when these VCs came in. The early stage funding was actually not being catered to by anybody, and that was the sort of highest risk Wild West sort of phase that everybody stayed away from. And on top of that, when we looked at the VCs that were operating in Pakistan, and obviously most of them are my friends or professional colleagues, and I have tremendous respect for them for entering Pakistan before it was the flavor of the year, and everybody was looking at Pakistan. The eye to eyes and the Samaya cars and all of these people started before Pakistan was a hot market, right? So they preempted that. But in terms of the partners in Pakistan, I would say that 9 out of 10 partners, not just these guys, but even the regional VCs that were looking at Pakistan, the partners themselves had 9 out of 10 partners had not done startups inside Pakistan. And when we looked at that sort of lens that they had, we realized that it's a very different ball game doing a startup in the US and having that whole ecosystem behind you and that culture behind you and the whole premium or value of, let's say, stock options and equity and the startup life, versus in Pakistan, where hiring 100 people for a startup, technical startup, and then firing 50 people from a startup in Pakistan is a totally different ball game compared to, let's say, California or anywhere else in the developed market, right? And where people have put, even now, people place zero value on actually ESOPs and equity and all of that. So I think that was the gap that kind of convinced us or pushed us over the edge, that it was us that needed to step up, and we'd been wanting to do this for a while, but we were kind of wondering what would be the ideal way to do this, and that's why we structured ourselves as a rolling fund, because we wanted to hit the ground running. We wanted to be a plug and play mode and be deploying as quickly as possible towards the end of 2020, because things were heating up. And we had also seen some of the other VCs sort of announce their total fund size, or make a very, very sort of bold statement about the kind of funds that they would deploy. And then, because Pakistan is a hard market to raise from the LPs, it literally would take them, in some cases, like 2 years, but mostly 12 to 18 months to actually raise a major chunk of their fund, and even then they couldn't complete those funds, right? So we realized that these were certain things that we could bypass or circumvent, and that's why we decided that. Also, in the early stage landscape in Pakistan, at that time, we wanted, because we were sector agnostic and we were looking at multiple verticals, because no single vertical in Pakistan, even now, has enough high quality deal flow for you to focus just on that, right? So let's say today, if I want to open a fund that says we're just going to do fintech, I will just have 2 deals a year that I'm going to be happy with, and then I'll be desperate to deploy in subpar deals, right? So if I just want to focus on e-commerce or fintech or anything, there are very few high quality deals that at least I would be happy with. So that's why the thesis of the fund was that, number one, we want to fill the gap because we feel we have a better idea of the pulse of the early stage founder in Pakistan than compared to the other VCs who have a more sort of formal lens, or they're further downstream. And this was 2020, before the last year's shakeup happened. And also because we ourselves were founders and operators, and we had built startups and destroyed startups and sold startups, so we had been through that entire cycle, and we wanted to fill that gap, number one. And then also we wanted to be sector agnostic and keep our ticket size in such a range that was that would make an impact to the startup that we were investing in, but also we would be able to spread the net wide. So, for example, we decided to max our ticket size at 300K. And let's say if we have $1 million to deploy, we're not going to do just one company with 1 million. We felt that early stage investing at that time, rounds were a couple of million, and they weren't really the massive rounds that we saw last year. So 300K was the cap where we could do, maybe 3 or 4 companies in $1 million. And with that in mind, we went in across multiple sectors, and now we've done more than 10 deals. A few of them haven't been announced. I'll share some of them as we talk. So that was the thesis. And despite the large funds coming in, despite all the craziness, we feel we've done well as a small fund, and we've sort of partially filled that gap where a lot of startups were falling off the cliff in the first year, and they didn't have any funding in the first year. And we've sort of tried to fill that gap. Not only do we come in ourselves, but we have a network of angels that we sort of mobilize and take deals to. We have other VCs also now looking at deals much earlier than they were in 2020. So a lot of the larger VCs as well, they've kept a portion of their funds to deploy for small ticket sizes and actually groom that entire pipeline for their later seed stage and pre-series A sort of deployments. So yeah, I think it's worked out well as far as we're concerned.
Yeah, definitely. So I did want to talk about your portfolio because I think lately you have been quite active with Remoti, and there was Farmdar and Metric and all those announcements that you made. Like, I'm really excited about some of those startups just because, know the founders or have spoken to founders. So before I get to that, I mean, you mentioned in passing that 2021 was crazy, and that is of course a valid statement. Was crazy. Valuations have come down. The activity has slowed. Everything has slowed this year. And of course we had the Airlift shutdown. First the Airlift layoffs, then the shutdown, and now the tag controversy. So the ecosystem, it seems like it's going through turbulence, right? So during this turbulence, when new startups are coming out and they're trying to raise money, 100%, I can assure you that they are facing this question about, hey, startups are failing in your country, or there's lots going on in your country that we don't like. How do you feel as someone who is in Pakistan, invests in Pakistani startups, how are you tackling this new environment where you have to maybe convince your LPs, or maybe you have to convince a startup founder that you have invested in when they're trying to raise a new round, how to navigate this new waters?
Right. So I think in terms of our own structure, because that was one of the reasons why we kept a rolling fund, because we were fairly confident in our network around the LPs, and all of them were on board in terms of the thesis, right? So that was the reason why we didn't go to large institutional LPs, because our fund size was relatively small compared to the others, and we didn't want to get bogged down in that decision making, because we'd seen some of the larger funds suffer because of that, right? They had deals on the table that suffered, they couldn't deploy in time, and even right now, a lot of the LPs have actually put the brakes on a lot of funds deploying more capital inside Pakistan, right? So we by virtue of being a smaller and more lean fund by design, and that was the intention from the start, we've sort of avoided that as far as Deosai is concerned. I think in terms of founders raising, and again, we're a small nascent market, but I think what's happened is that because there's a global slowdown, things are bad everywhere, right? So it's not as if it's just Pakistan. For Pakistan, unfortunately, because of the change in government and the political turmoil that catches the headlines, as well as the economic turmoil, I think we're in a bit of a double bind or a double whammy because of that, because even the other markets where already investors are holding off, they just have the economic slowdown or the global slowdown to worry about. But when they think of Pakistan, there's an added layer of uncertainty because of the politics and the forex and all of that, right? So definitely, it's one of the toughest years in terms of the economy as well as the ecosystem for Pakistan. There's no denying that. But that said, I think the silver lining is that most of the people who came in last year, as far as the regional or global funds, they were basically, the markets were flush with cash and they were looking at emerging markets to deploy. And they really didn't, globally, they really didn't take deep dives in terms of due diligence or in terms of just being, less risk averse across their portfolios. But most of those deployments were actually seed stage or pre-Series A or Series A, and a few beyond that in Pakistan, right? Um, the true early stage funding still exists in Pakistan because that wasn't really filled in by these large names coming into Pakistan. So what's happened is that anybody who's raising for let's say a pre-seed round, he or she is still facing more or less the same list of investors that were there 12 months ago. In fact, now the surprising outcome of the larger investors sort of retreating in 2022 is that a lot of angels are now forming more formal syndicates, and these angels were doing smaller ticket sizes, below the radar, very fragmented on an individual level. But since they saw Pakistan over the last 2 years, and they saw the market being validated, and they saw these massive deals happening, now when there's a downturn and the big names have retreated, the valuations are more rational, the deals are more rational, and also now these angel syndicates actually have space on the cap table to actually do those deals, because last year, even if they wanted to come in on those crazy valuations, the VCs would just elbow them out, and there was no space for no name small angels or syndicates that had no strategic value, right? So they were on the sidelines, they were looking at this hot market blowing up, but the angels couldn't deploy because nobody would give them the time of day, right? Frankly. So I think that's the silver lining, that now for early stage funding, a lot more angels are now actually publicly active and active in a structured way, and they're forming syndicates, and they're looking for deals. And the founders are also now kind of more level headed about the valuations that they're asking for. And it's good to see founders, at least the solid founders, going back to fundamentals, going back to unit economics, trying to build out business models that are sustainable in the long run and not just throwing money at growth for the sake of growth, which even if they want to do, I don't think there'll be a lot of investors in the market right now that are going to back them up for crazy rocket ship growth anymore. So I think that's a blessing in disguise that's happened. Also, a really interesting phenomena, which is a corollary to the angels, is now we're seeing a lot more local corporate groups and a lot more family offices actually being more interested in this. And all of them as well, they were big names in Pakistan, but they were new to, let's say, family office investing in the tech sector, or they were thinking of making their own VC funds, but they didn't do that, and they deployed through Indus, or they deployed through Fatma Gobi, or they deployed with Walled City, or any one of these names, right? And they sort of dipped their feet in the market for the last 2 years. They liked what they saw, but they really couldn't get in on the juicy deals last year, right? And now that the market has cooled down, a lot of these family offices are now wanting to get serious and wanting to fill in this vacuum, which is going to last for I would say the next 1 to 2 years at least, before things start heating up again in 2024, right? So that way, it's an interesting time. Obviously, family offices are more conservative. They have longer due diligence cycles. They have different benchmarks. They're harder to convince than, let's say, an angel sitting in the US who's used to the tech sector. But the vacuum is definitely being filled. Early stage funding is available. It hasn't dried out completely. It's a tough market globally. In any market, it's one of the worst years to raise. But in Pakistan, the ticket sizes are small. The founders are getting more mature. The products are getting more mature. Generally, we're headed in the right direction, even if you see the ticket sizes for the first half of 2022. Although, the disclaimer is that a lot of announcements in Q1 were actually hangovers from Q4 of last year. They'd happened in Q4, but they were announced in Q1. So we need to discount that by about 50% in terms of the Q1 numbers. But otherwise, deals are happening. I see more deals happening, or at least a healthy pace of deals happening, but the overall rounds and ticket sizes are going to be smaller, obviously, compared to last year. And we'll see less and less of those crazy mega deals of 2021, like, the 30 millions and the 50 millions are going to be few and far between, if any.
For me, like my concern, since the airlift and the tags of the world are now, coming in limelight, my concern has been like the kind of coverage that they're getting and what negative impact that has on the rest of the ecosystem. Because I feel like when I hear some of these people talking about like why Airlift failed or what's happening with Tag, I feel there's a lot of like there's not a general understanding of how startups work, right? The people just think that a startup that raised money will just become successful. Like that's something that's a very Pakistani thing. Like people, rest of the world, don't look at startups that way because 90% of them will fail. So do you think we took, like as an ecosystem, like I'm talking about myself too, do you think we took it a little bit too much, too far when it comes to like, criticizing or sharing our insights on Airlift or Tag? Because it's just a startup and it's failed. And of course, in hindsight is 2020, a lot of things will be said, a lot of things will come out in the future. But does that mean that we paint the entire ecosystem with the same brush when it comes to startups?
Yeah, that's a really good question, and that's one of my areas of concern as well, right? That this ill-informed sort of narrative is going to damage the overall ecosystem and the overall culture that's being built really, really carefully, right? And we're still a nascent system. The good news is that I feel we've turned the corner in terms of the critical mass of the ecosystem. So this is a really healthy sign that, unfortunately, the tag issue this week is also going to blow up. But, Airlift blew up like 100 times more than I expected it to, just the news and the discourse on that. But I think it's a sign of a healthy and mature system where the ecosystem is not just dependent on a one-hit wonder or just your quote unquote poster child of a certain vertical, right? So yes, Airlift happened. It's a complex story and there are many layers to it, but keep calm and carry on. The king is dead, long live the king, or however you want to frame it. Um, Beyond Airlift, there's a healthy ecosystem where there are, hundreds of now startups that have raised capital, and a lot of them will shut down because of the slowdown, because of the economy, because of the natural cycle, but a lot of them will continue, right? And what this actually does is that this just actually establishes a broad range of benchmarks that was not there before. So, the next time you say that somebody's going to be a unicorn, or the next time you take a certain hot startup and you start calling them the poster child of e-commerce or the poster child of the Pakistani ecosystem or the poster child of fintech, you're going to be using those labels, or you'll a bit more carefully, and you'll be a bit more discerning before putting somebody on a pedestal, right? Because there's a whole range, as you said, that raising $100 million doesn't mean that you're going to succeed, whether it's Airlift or anybody else, right? So I think that it's really good that you have these on one side, and then you have a whole range of other startups that are trying to build long-term business models that are not crazy hockey stick growth, that are not even pretending to be the next unicorns, but they're trying to build more sustainable businesses. They're trying to focus on unit economics. And again, there are multiple ways to do this. Uber is the biggest poster child of any such sort of high growth startup anywhere in the world. And this quarter was their first actually quarter that they posted something which was not in the red. So that should tell you how long it takes. They've been in the market for about 13 years. So that's one way to do it, where you raise billions and billions and you subsidize your model. And then there are other sort of more sustainable ways, which are more, I think, amenable to the Pakistani market. And also the much smaller round sizes and much smaller startups that are just trying to build really interesting products. So all of those deals are going to be still happening, and there will be more of those deals, right? I think definitely we've moved on to the next level. We've turned the corner. We have critical mass. The ecosystem is not going anywhere. But at the same time, these were sort of nuclear events. And what happens is that the general narrative mostly from people who are outside the sector and who are speaking from a position of either being ill-informed or being partially knowledgeable about how this works. The knee-jerk reaction is that VC funding is some kind of American phenomena that will not work in Pakistan. Startups are some sort of scam, and they're just opportunists, and the founders make money. And even after shutting down, the founders make millions and walk away. That's obviously a fallacy, and it's false. Um, Generally, Pakistani DNA is risk averse, and people right now, because of their personal sort of risk tolerance, are going to be not looking at jobs in fast growing startups as they were last year. They'll go back to the MNCs and the corporates, and just kind of there'll be a cool off period in terms of older people with families and commitments are obviously risk averse to begin with. So they're not going to be looking at finding the next Airlift to do a job, even if it pays double of what they get in the corporate sector. And there'll be a sort of, the pendulum is going to swing back towards slight risk averseness, and people will cool down. But, it's definitely going to come back. Also, I feel that initially when things were slowing down globally and Airlift and other things were happening, I was kind of sad because I was hoping that we would retain this momentum, especially not Airlift, but for the global slowdown. When that started happening, and suddenly within 2 weeks, especially within the VC sector, funds started drying out globally, I knew there'd be a domino effect for Pakistan as well. I was kind of sad because I was like, 2021 was a crazy historic year for us, and it was equal to the last literally 5 years of funding. And only if we had 2022 and 23 and 3 years of momentum, we would have been at a totally different level by 24, right? And I was kind of sad about that. But then when I started to take it all in, I realized that this was actually a blessing in disguise, because the valuations and the craziness of 21 was something that was not palatable for a nascent market like Pakistan. It was just getting too crazy. Like investors we work with, or investors who were interested in Pakistan, when they used to look at the valuations in Pakistan, they'd be like, I'm investing in America or Europe at these valuations. And the upside over there, or the probability of a genuine unicorn in those markets, is 100 times more than, let's say, waiting for Pakistan's first unicorn to form, right? And below that first unicorn or poster child, there's a massive gap. And the other valuations or the other startup exits are going to be like $100 million or $50 million. They're not going to be $500 million, right? So I think that way, again, the silver lining or the blessing in disguise was that if we had gone on at that momentum, the fluff in the market and the craziness would have just destroyed the entire ecosystem. I think it just would have gotten so crazy that so much hot money would have come in for the next 2 years, that then if the market slowed down, it would have been like disastrous for us, right? So I think that way, kind of, because the whole world is slowing down, it's okay to be in the same boat.
I have some thoughts on the world slowing down, because in the US, like, we kind of have faced the same situation as the rest of the world, where there's a lot of negative media around the fact that, oh, okay, layoffs are happening. Facebook is laying off people, Google is laying off people, Microsoft is laying off people, all these, startup, or the hiring freeze, right? They're having a hiring freeze, or they're laying off people. So big tech is suffering, everyone's suffering. But then again, you look at the data that came out yesterday, actually today, 500,000 jobs, unemployment rate in the US is now 3.5. 20 million jobs have been gained since the pandemic started. So basically all the jobs that were lost due to the pandemic have been gained back. Economy in the US is like, yeah, there are some signs, but it's moving along. Like, it's not as bad as the media's portrayal of, like, doomsday. Like, this is the end. When you were talking, like, there were so many questions that I wanted to, ask you about and follow up on. So let me start with this. When it comes to due diligence, like, I know last year due diligence was not a really big deal. Like, people were making deals over Zoom, so over pitch decks, over
Right.
like one pagers, right? So now that's changing, right? So what is your process in, like, doing due diligence in terms of, do you check the references on the founders? Do you check if the tech works? Do you check the books? Like, how do you go about doing due diligence?
Right. So I think even last year, all of this FOMO, and even for some of the larger deals, right? I agree that, and that happened globally, right? Not just in Pakistan, but even in mature markets like America, due diligence was out the window because it was a buyer's market, right? It was a founder's market, and even in Pakistan, you might have heard, even in some of the largest deals, where the founders were like really, really good fundraisers. So they literally gave 72 hours to large VCs to say yes or no, right, on a term sheet. So obviously there's going to be zero due diligence on that, and a lot of times those VCs actually said yes, right, and it was totally like unthinkable. So just to put some context on due diligence, right? I, I think especially some of the larger VCs and the institutional investors that were investing in Pakistan, a lot of them were pulling the trigger based on the co-leads, or at least the secondary investors in the round that were based in Pakistan. So you'll see all of these large deals where any regional or top global US fund would come in, but they would only come in when a large VC that was based in Pakistan and that had feet on the ground in Pakistan was also taking part in that deal. If there were a few deals where there was no Pakistani VC, then other sort of they either hired somebody else for due diligence, and it took much longer, and that deal wasn't really wrapped up in a couple of weeks. It ran its course, even if the due diligence was on the lighter side. So one thing that was happening was that a lead VC would come in last year and they would say that, we're really interested, but we will only come in if you have XYZ or some well-established VC out of Pakistan as the co-lead, or at least as a part of the round, because we'll be relying on them to do the DD, right? So that's a workable model. The angels and a lot of the smaller VCs were doing deals on Zoom, or just doing deals remotely, but that's how it happens in America as well, right? Angels can literally take one phone call and then sign a term sheet, and then it's obviously subject to basic DD, or subject to getting a basic investor vault with all the checklist in place. But that's how it happens globally, and I'm really glad that that's happening in Pakistan right now. Nobody could ever think that somebody sitting in America would do two phone calls with you and write a $10,000 check as an angel, right? It was like fantasy land for most Pakistani founders, and that started happening now, even for larger checks. In terms of the local DD, for those of us who are on the ground and who are in Pakistan, I think it's a pretty standard procedure for us. The As I said, you have to have a pulse on the market. You have to have the right connections. And it saves a lot of time to know people in the industry who've worked with those founders before, whether they're from the tech industry or the now more and more sort of corporate people are also jumping ship and coming into this. So that's kind of really good that we're seeing a mix of like hardcore techie founders as well as the more corporate mature founders coming in, right? So somebody who's done trade marketing or retail or something like that at a Reckitt or a Unilever or a P&G or a Pepsi or a Coke or Engro or whatever would leave their job, and then one of the co-founders would be a technical CTO. And it's really easy to do a background check on people who've been in the mainstream corporate sector. It's really easy to do background checks on people who worked in well-established tech companies in Pakistan. That's one of our advantages as well, and that's one of our sort of one of the things that sets us apart compared to the other VCs, that most of the other VCs and the partners, they themselves, like I said, they haven't done startups in Pakistan, but they're also not from the tech sector. So, they've either done investment banking outside Pakistan, or they're from the tech sector, dev sector, or telco, or, corporate IT outside Pakistan or whatever, right? And that's a totally different DNA and background. So that kind of helps, where we know the local players really, really well. And in addition to that, then it's just standard sort of the books and all of that. The legal part is kind of pretty standard boilerplate.
When we talk about startup valuations, right? So one thing that I've noticed is so you are really going in very early, like you said, pre-seed, seed stage, right? So you're going really early. At that stage, are you doing price rounds or are you doing just simple safes?
We're doing safes mostly. 90% are safes.
Okay. So does that mean like within like, in the US, it's very common, like within 18 months, you have to raise again. So does that mean every single portfolio startup of yours will have to eventually like within 18 months or 24 months start raising again, or, even before that, of course?
Yes, that's right. So in Pakistan, what's happening is barring some of the high profile deals where it was, they were doing safes at crazy valuations at later rounds as well. I think everybody's fairly comfortable about doing safes in pre-seed and then even at a seed level, as long as the valuation caps are not crazy, right? So the first sort of 12 to 24 months are generally after a very small friends and family round. Most of the startups do their first sort of structured pre-seed. That's where we come in. And then they do a seed later on, which is also on a safe. And then a pre-series A or obviously a series A will need to be a priced round. But because we've been active in the market for a little under 2 years, we haven't really seen a lot of portfolio companies reach that stages yet.
When you talk to, like, one of the things that I sometimes have to, like, explain to people in terms of like how will Pakistani startups exit, because if you look at it, they're raising money in US dollars, like 10 million, 15 million, 20 million dollars, and Pakistan's most highest cap company on Pakistani stock exchanges, like it is, by the time a startup will reach like Series B or Series C, it will be more valuable than the publicly traded Pakistani company. At what stage are we at right now where you feel like startups will eventually be acquired by bigger players, either within Pakistan or companies outside of Pakistan? They're trying to build they're trying to enter Pakistan, or do you really think Pakistani startups have an opportunity in the future where they would just go to, for example, Dubai and go public there, or for US, like Suel did it from Egypt, and that would be another route that they could take. So where do you see things going, and like, how do you approach this question if asked, like from LPs, like where will you get your exit from?
Yeah, that's a really good question because only a handful of exits have happened, and that's a culture that doesn't exist in Pakistan right now, right? And everybody's sort of taking a leap of faith and moving forward based on wishful thinking that they'll figure out some sort of an exit strategy down the road. So I think if I were to look at this from a top-down approach, I think there will be some companies that will be the highest valued companies, like you said. Their valuation will be even larger than the top companies at the PSX. And obviously, the PSX doesn't have that appetite to do an IPO, even if that company is global. Inside Pakistan, the PSX doesn't have that appetite. So, as an example, if I were to tell you that moving a few years back, as an example, if we were to take Careem, right? Let's say that Careem was not headquartered in Dubai and they were headquartered in Karachi, but they were operating globally in exactly the same number of countries, and they were a global entity. Exactly the same Careem, but let's say they were headquartered in Karachi and they wanted to do an IPO on the PSX. The PSX doesn't have the appetite to do a $3 billion IPO or a $2 billion IPO, right? So for such high value exits, it will have to be M&A for sure. And it will have to be a Careem style M&A where they would naturally be operating outside Pakistan in multiple geographies. And that's going to justify their value, or that's going to justify their numbers to whoever obviously acquires the company. So Careem added value for Uber. Similarly, if you were to look at Daraz was also at the group level, it was a sort of a regional play. And you will have the Alibabas coming into Pakistan and acquiring something like Daraz. You will have the Ant Financials coming into Pakistan and acquiring something like Easy Pesa, and those sorts of large deals that will happen. But they will have to have a regional element. Otherwise, just a Pakistan only startup that just caters to the Pakistani market, unless it's in a vertical where it's, unless it is the next biggest digital bank in Pakistan and they're really hitting it out of the park and threatening traditional incumbents. I don't think any regional bank is going to buy a fintech for $200 million inside Pakistan, right? So for that, there will be a handful of deals at the top of the pyramid that are going to be M&A deals. They'll be have a regional footprint, and that's where the ideally the first unicorn or whatever the next Kareem is going to come from. Um, I think a lot of companies that have overvalued themselves in the last 2 years are in for a rude shock, or they're in for down rounds over the next 2 years. And that is going to also be a technical correction or just a market pushback on the craziness. And I was hoping that, when I started hearing the airlift rumors, I was really hoping that after the layoffs that they could figure this out over the next 18 months. And a down round would have been something that would have been good for the ecosystem. It would have been good for everybody else as well, and they would have survived to fight another day, right? I was really hoping that they wouldn't shut down, and they could sort of do a down round and come out after 2 years, but that didn't happen. That's going to happen to some of the other sort of top 10, 15, some of the other top 10, 15 companies in terms of valuations, because they've done monster rounds, and they will either need to really, really double down on their numbers and unit economics and growth and genuinely show, top and bottom line, which justifies their valuations. Otherwise, they'll be facing down rounds. Some of them already are, as far as I know. And then you'll have the sort of third tier, which is going to be the more manageable valuations inside Pakistan. Predictable revenue streams, predictable trajectories. I think those IPOs will definitely happen in Pakistan. IPOs are going to be a better exit strategy than any large local group or regional group buying you out, because these guys always lowball offers in acquisitions, and none of these, even if they have the money, no large group is going to pay 30, 40, $50 million for a top startup. Even if that price is justified, the local appetite and the local sort of temperament is not there, and they always lowball you, and their flawed thinking is that they can spend $20 million and recreate that startup instead of paying $50 million for an acquisition, right? So I don't see a lot of those deals happening. But the thing that I'm really interested about, and I really see more of that happening over the next 5 years, is the gem board and the smaller IPOs happening, right? So I think that so far has been a very ignored avenue for exits. But that's such a natural fit for Pakistan, especially for the IT sector and especially for services-based companies, because they find it harder to do VC funding. And even if they do have some sort of an angel round or, strategic investor or corporate investor, their exit options are like really limited, because nobody wants to buy a services company out of Pakistan generally right now, at least, right? So I feel that, doing smaller IPOs, which are not massive IPOs, but anywhere between 5 million to, let's say, even on the upper side, $50 million. In addition to the M&A activity, I think the small size IPOs are going to be increased in size over the next 5 years. And that's going to be an avenue that is ignored so far. But I think it's going to be a great option for a lot of mid-sized companies in Pakistan. I'm really looking forward to that.
One last question I want to ask you is, so you probably see a lot of deal flow because your website says no warm intros needed. So you probably receive a lot of emails, inquiries asking if you will invest, right? So where do you see, what are founders trying to do lately? Like, for me, for example, I'll tell you, everyone here is talking about, Web3. And that is it. Like, people just want to talk about Web3. So is there such a trend in Pakistan where people are just focusing on one niche or one category of the market?
So luckily there isn't, but and you're right about the although that's our brand and that's our DNA about no warm intros, but it's a double-edged sword, because I think I'll also apologize to everybody with whom I'm late with my replies, because it's a good problem to have, that you have more deal flow than you can handle. But the signal to noise ratio for a early stage inbound in Pakistan is like kind of crazy, right? So, out of 100 Zoom calls that I do, 90 Zoom calls, I know for a fact that it's not going anywhere, and it's just the first hour that I need to spend with them, and then It's more of a mentoring session rather than a startup evaluating session. Um, yeah, so in Pakistan, I think there were definite waves, and there was a mobility wave, and then there was a last mile delivery wave, then there was an e-commerce wave, then there was a fintech wave. So all of that has happened, but those in themselves are fairly large verticals. And now the interesting part is that, which is kind of again a sign of the maturity of the ecosystem, we're now seeing more mature founders actually leave their jobs mid-career, and they're trying to do startups that are very, very focused on the verticals that they have domain knowledge over. And that's a really interesting trend, right? So let's say pre 2020, you had a lot of young cowboys or fresh grads just jumping onto the bandwagon, and let's play this startup game, and let's make a pitch deck and start going around pitching. And some of them were successful and some of them weren't, but the quality of the founders in the startups was kind of abysmal at that time, right? But now, just the maturity of the products, the maturity of the founders, what they're trying to do, they're mid-career, they know retail, they know delivery, they know logistics, they know e-commerce, they know the food sector, they know health tech, they know ed tech. So yeah, I think that is a definite improvement over the last couple of years. In terms of verticals, I feel the two sort of ignored or really hard to raise for verticals have been ed tech and health tech so far. Ed tech is still tricky in Pakistan. Everybody claims that they want to be the Baiju of Pakistan, but it's easier said than done. And the monetization on that side, especially on the B2C side, doesn't really exist. B2B is also limited, and the kind of ed techs that are going to succeed definitely have to very quickly validate their product in Pakistan and then move to a global market just in terms of dollar revenue, right? Otherwise, it doesn't make sense. Health tech is something that is really picking up, and I would put insure tech next to health tech as well, because it's a good combination. So a lot of health techs are teaming up with insurance companies, and it's a sort of a complementary market on that side. Again, hard to raise for, but people like Sehat Kani, who've been in the market for a while, some of the other health techs, they're really gaining ground. And again, Ilaj and all of these consolidations happening, they're trying to move beyond just booking a doctor or just a simple e-pharmacy. And they're trying to do a sort of a mini super app of health techs, right? So they want to do the e-pharmacy part, they want to do the doctor booking part, they want to do telemedicine, they want to do hospital and clinic management. Very few have been able to do all of these well across all of these functions, but that's an exciting space for sure. And then obviously within fintech, within e-commerce, I think there are verticals, and there are now people are trying to cut the pie in new ways, and trying to wriggle in on the space that Daraz has held for so far. Similarly, on the logistics side, we one of our first investments was Truck It In, which is a digital trucking platform and freight platform. A lot of people are looking at last mile delivery, interesting options between intercity, lots of consolidation happening over there as well. Agri-tech is something, again, we have Farmdar and we have Easy Fresh, two of our agri-tech investments. Agri-tech is something that's really picking up, not just the typical sort of, soil sensor data and all of that, but the, farm to market, cold storage, supply chain, warehousing, financing for agri. That space is really heating up. Again, hard nut to crack, really, really fragmented, but agri the world over is kind of important for Pakistan, just for food security. It's super important. Our yields are one of the lowest. We're really doing badly in terms of our efficiency on agri. So that's a massive market that's developing. I think that's a hard space to look at.
Excellent. Like I feel much better after listening to what you had to say about like the deal flow and everything. So yeah, that's great. And amongst all the doom and gloom, it just it feels great that the deal flow is there, and you are actively investing. You are doing God's work, basically. So okay, I lied to you when I said this is the last question, but I have one more question.
Sure.
Deosai Ventures. What does Deosai mean?
So Deosai is an area in the north of Pakistan. They're called Deosai Plains, and in the local language, it's considered, the land of giants. in local folklore. There's a lot of folklore around that. But just in terms of the place, and if you get a chance to go there, I'd suggest please do. And it's just a place that is larger than life, and it leaves you with a lot of positivity. Even if you just look at the amazing photos of Deosai, I think it leaves you with optimism. So that's what we want to denote as well. We wanted obviously a name that was Pakistani, but that sounded global. So that was the reason behind Deosai.
Wow. Okay, that's quite a name then. Okay, I had no idea actually. I thought it was just some name of some personality that I'm not aware of, some Greek god or something.
So one comment on Deosai, when we launched, and we're obviously called Deosai Ventures. So our website also has a photo of the actual planes and the the vast scenery over there. And people that I knew, they started pinging me, and they said that we want to book a trip for our company through Deosai Adventures, because you're taking people up north
Oh,
on these tourism trips, and we've heard you've opened this tour company, right? So I had to say that it's Deosai Ventures and not Deosai Adventures. I would suggest do check out the
well,
videos. There's some. I'll send you some links. I think it should be on your bucket list for your next trip to Pakistan.
definitely. Yeah, I my trip to Pakistan has been limited lately to Karachi only, and I visited Karachi in March after 16 years. So, inshallah, next year, maybe in a couple of years, definitely I want to visit Lahore. I've never visited Lahore, so I want to check it out. But yeah, I'll definitely put that on my places to visit, DOSI. Thank you so much for being on the Misaal podcast. This conversation was extremely insightful, and it was really great learning a lot more about you and what you're up to, because I've followed you for a really long time and I always wondered, what's the backstory. So thank you for sharing all the insights with me.
No, thank you so much for having me. Pleasure talking to you. And thank you for covering Pakistan. We need more content like this. So you're the one who's doing God's work. Pleasure to be here.
Thank you so much. Thank you. Thanks for listening to the Misal podcast. I hope you enjoyed the podcast and will thank me by writing a review or sharing it on social media. Make sure you follow and subscribe so you don't miss the next episode. Thanks again. See you soon.